Big tech reported earnings this week, and we're going to go over the earnings reports and technical analysis for Google, Meta, Microsoft, Apple, and Amazon. Let's jump right into it. But before we do, let me get a sip of pre-workout because after these financial gains, I'm going to the gym to get some gains. But let's jump right into it. All right, let's jump right into Google. Google had a huge quarter. They reported revenue of $102.3 billion in one single quarter. This is their first ever quarter over $100 billion. We see that Google Services revenue increased by 14%. Google Cloud revenue increased by 34%. That's huge. Total operating income increased by 9%. Operating margin was 30.5%. Net income increased by 33%. Earnings per share increased by 35%. This is a huge, huge quarter. They say Alphabet had a terrific quarter with double-digit growth across every major part of our business. We delivered our first ever 100 billion quarter. Our full stack approach to AI is delivering strong momentum, and we're shipping at speed, including the global rollout of AI overviews and AI mode in search in record time. In addition to topping leaderboards, our first-party models like Gemini now process 7 billion tokens per minute via direct API used by our customers. Google Gemini app now has over 650 million monthly active users. That's pretty cool. We continue to drive strong growth in new business. Google Cloud accelerated and in the quarter with 155 billion in backlog. So I think that means they have 155 billion dollars in business coming next quarter or coming up soon. And we have over 300 million paid subscriptions led by Google One and YouTube Premium. So YouTube Premium is growing too. Google is looking really good. Let's look at the charts. Now, I did start a position in the YouTube portfolio in Google. I already hold Google in my Roth IRA, and I had thought about adding Google in the YouTube portfolio prior to earnings, but I didn't because I was focused at looking at other companies. One thing I noticed is my Roth IRA has my core companies that I really believe in. And when I started the YouTube Challenge portfolio, I was trying to find 10 different companies that weren't in my Roth IRA. The problem is I feel like the companies in my Roth IRA are the strongest companies in the market. So instead of looking for new opportunities, I'm doubling down on the companies that I think are going to do well. So I did start a position in Google today. And if you look at the chart here, we see that Google had that big gap up after earnings. And then it started to retrace back down. And I bought at 278, so almost towards the bottom of this day, towards this wick. So if we take the Fibonacci extension from the previous high to this previous low, we see that Google hit the 2.618 extension. Let's see if it's at the 275. Yeah, so it hit the 275 extension exactly. So I felt like that was going to be the top. Sure enough, it started going back down, and I was trying to wait for it to get down and close this gap at 276. It didn't quite get there. It got down to 277.50. So I got in at 278 and is up a couple dollars. So starting my position in the YouTube portfolio at that point. Looking at this chart, I think this could be a wave 1, wave 2, wave 3, wave 4. So we still have one more wave up most likely. If wave 5 is the same length as wave 3, we are looking at a potential price target of, assuming this is the bottom, in the 300s. So let's say 300 to 330. Google is firing on all cylinders. I see no reason why they won't continue growing and hit this mark. So start a position in YouTube portfolio. Very confident in the company. It is in my Roth IRA. So everything is looking good there. Let's jump into Microsoft. So revenue was 77.7 billion, which is an increase of 18%. Operating income was 38 billion, which was an increase of 24%. Net income was 27.7 billion, which was an increase of 12%. Earnings per share was $3.72, which was an increase in 13%. On a non-GAAP basis, it was $4.13, which is an increase of 23%. So let's read what they say. Our planet-scale cloud and AI factory, together with copilots across high-value domains, is driving broad diffusion and real-world impact. It's why we continue to increase our investment in AI across both capital and talent to meet the massive opportunity ahead. So, interestingly, Microsoft went down after they reported earnings, I think because of how much they're currently investing, and it's making investors cautious. So, even though they reported great earnings, Microsoft is down, and they're actually down at the 50-day moving average. Wow, I might actually add a share in my Roth IRA to this company right after this video. I took the Fibonacci retracement from this high to this low. I think this is a great cup and handle forming. I'm going to have to buy a share as soon as I get off this video. They are right at the 50-day moving average, so they're looking very strong. I'm going to have to buy a share. I'm going to have to hurry up on this video. But as of now, if you're not in Microsoft, this is not financial advice. I'm not a professional. I don't know what I'm doing. I'm just guessing. I'm just making stuff as I go. But I think this is a great time to add or start a position in Microsoft if you're not in Microsoft already. They're reported a super strong quarter. Price is down from its peak. Yeah, things are looking really good for Microsoft here. All right, let's go into Meta. So Meta reported $51.24 billion and earnings per share was $7.25, which beat expectations of $6.69. So they reported a very strong quarter, but the issue is they faced a one-time tax charge of $15.93 billion, and they are also spending a ton of money on all their AI advancements. Talk about excluding this one-time tax charge, our third quarter 2025 effective tax rate would have decreased by 73 percentage points to 14% compared to the reported effective tax rate of 87%. So they had a huge tax liability this quarter. Net income would have increased by 15.93 billion to 18.64 billion compared to the reported net income of 2.71 billion. Diluted earnings per share would be increased by $6.20 to $7.25 compared to the reported diluted earnings per share of $1.05. So basically they're saying they reported a very strong quarter. Everything is going well, but they had a huge tax bill and they have a lot of spending. So Meta sold off quite a bit. Oh, that's a big drop. Meta is currently under the 200 moving day average, which is very bearish actually. Let's look at the weekly chart. So looking at the weekly chart, Meta is currently under the 50-day moving average. Based on this, if this is a new wave one, let's say, and they're starting to retrace, doing their ABC correction, and they have a little gap here too, actually. So it's quite possible they get down to the 618 to 65. Again, Meta is the only one of these companies I don't invest directly in. I do invest in them via VOO and QQQ. But if they get down to around the 600, I might have to start a position in them. Wow, that's interesting. I'm definitely going to have to keep my eye on Meta coming up. But as of now, they went down quite a bit post earnings, and they're down another 1.5% today. So I'm going to put this on my watch list. This could be the bottom right here, but I'm going to watch it into next week. All right, let's go into Amazon. All right, so net sales increased by 13% to 180.2 billion in the third quarter compared to the 158.9 billion in the third quarter from 2024. Excluding the 1.5 billion favorable impact from year-over-year changes in foreign exchange rates throughout the quarter, net sales increased 12%. The thing that got people really excited was this. AWS segment sales increased by 20% year over year to 33 billion. A lot of people are expecting a smaller increase or a smaller rate of growth. The fact that AWS increased by 20% is pretty big. Operating income was 17.4 billion in the third quarter. So same as third quarter in 2024, 17.4. So Amazon is looking good. Amazon is growing well. Operating cash flow increased by 16%. Free cash flow decreased to 14.8 billion. So free cash flow decreased. That's interesting. We continue to see strong momentum and growth across Amazon, and as AI drives meaningful improvements in every corner of our business. AWS is growing at a pace we haven't seen since 2022, reaccelerating to 20.2% year over year. We continue to see strong demand in AI and core infrastructure, and we've been focused on accelerating capacity, adding more than 3.8 gigawatts in the past 12 months. In stores, we continue to realize the benefits of innovating in our fulfillment network, and we're on track to deliver to Prime members at the fastest speeds ever again this year. Expand same-day delivery of perishable groceries to over 2,300 communities by the end of the year, and double the number of rural communities with access to Amazon's same-day and next-day delivery. So it looks like their custom AI chip grew 150%. Wow. So Amazon is making a lot of improvements. I'm not going to read through all of this during this video, but holy crap. I mean, Amazon is such a large business, and they have so many different segments. The fact that everything is growing is pretty impressive. And I think Amazon was up, so they're up 11%. They reported earnings yesterday. So taking the Fibonacci retracement from this high to this low, we see that Amazon is now at all-time highs. I wonder if this is a 1, 2, 3, 4, 5, if that's going to be the top of this wave. Let's look at the daily. So Amazon went up. They're starting to go down a little bit. Let's see if they retest this high. Actually, 1, 2, 3. So I think this is 1, 2. So I think this is the start of a whole new wave. 1, 2, 1, 2, 3. Yeah, Amazon's looking really good right now. So I wouldn't be surprised if they retested this 242. But Amazon reported a great earnings report. As you guys know, Amazon is a big investment in the YouTube portfolio as well as my Roth IRA, so that is up quite a bit today. But Amazon, very, very impressive report. Very, very impressive day, up 11%. Let's go into, I think we just have Apple left. Apple today announced financial results for its fiscal 2025 fourth quarter ending September 27th. The company's revenue of $102.5 billion is up 8% year over year. Diluted earnings per share was $1.85, up 13% year over year. So they are growing, which is pretty good. Today, Apple is very proud to report a September quarter revenue record of $102.5 billion, including a September quarter revenue record for iPhone and an all-time revenue record for services. So they are growing. And I believe in the call, they were saying that their next quarter is going to be even better. So I think that got a lot of people excited. But Apple's Apple, they're still growing, even with how large they are. Apple is down a little bit today. So Apple did hit all new highs, and now they're coming down a little bit. Yeah, all of these are looking like a completion of a wave or close to completion of a wave. They didn't quite get to the 1.272, so maybe they still have one more wave up, but Apple is at all-time highs. I personally wouldn't buy right here, right now. I already have a position in Apple in my Roth IRA, and while Apple is growing, I feel like there's better companies to put your money in right now. I feel like Google and Amazon are better investments. And even Microsoft and Meta being down so much might be good opportunities to put money into those companies. But Apple is growing. Apple is at an all-time high, so everything is looking good. VOO is up 0.3% today. QQQ is up 0.74% today, which makes sense since a lot of the big tech companies did very well. But yeah, big tech is looking strong. All the companies are growing, and the stock prices responded differently based on each report. So what do you guys think? Which of these 5 companies do you think is the strongest company, is going to grow the most over the next 2 to 5 years? I think Meta is the top on my watch list just based on how much it's down right now. But that is it, everyone. Let's keep those portfolios growing.